Good morning.
Lots of people early today.
Morning.
You can
Good
tell the
morning.
markets are up.
Good morning.
Morning. Yeah,
Good
right.
morning.
Yeah.
Look at Bob. He's already in the chair.
He's got a gray shirt on too.
And he's got his happy shirt on.
Yeah. Sweet.
Happy, 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 joy, joy.
Yeah.
Ren and Stimpy. Remember them?
Yeah. Unfortunately.
Slow
Oh,
today.
come on.
I wasn't a Ren and Stimpy kind of guy.
Uh,
I was more underdog, and
well,
who was the guy? Who was the Canadian guy? Royal Canadian Mountie guy and
Oh,
yeah.
Yeah.
You're surviving with that?
Yeah, I'm waiting.
Okay, well, let's get rolling. What a difference a weekend makes. Okay. Here we are. Dow futures rocket higher by 1,000 points after U.S. China agreed to cut tariffs. This is huge, and for a pre-market, up over 2.5% on the Dow. These are 30 stocks. Okay, S&P's up over 3%. Okay, on 500 stocks, and then you got the Nasdaq 100 up 4% in pre-market. Oil's up, and even the Treasury's up. And normally this is an inverse relationship. When Treasuries go up, we see the markets go down. So when I was looking at everything at 3 o'clock this morning, I was looking at what came to my mind was what could I call today? And I'm calling it market structures gone wild, because we're going to see big gaps in just about everything at open. Okay. And Trent and I were just talking when you open up 4% higher or 3.5% higher, if you chase that, and you can do whatever you want, not financial advice. But if you chase that and you get in at 4% higher on average, what's your upside? Is it going to go up another 4%? Is it going to be 8% higher by the end of the day? So you always got to remember it's not where it opens, it's where it closes. And we're going to have a lot of orders sitting on these market makers' desks ready to rock and roll, and people are going to have market orders out there and they're going to get in and potentially, get burned later in the day. We'll see, but just be careful out of the gate. Don't get caught up in FOMO. Follow your trading plans if you're trading, or your investment plans if you're investing. But there's this, the market structure is really kind of broken. Let me go over.
I think it's new territory right now.
I don't know. I don't know that's new. I mean, we could go back when the tariffs got on, it went the opposite way. We saw that big gap down. So this is like bizarro tariff world where it's going the other way, and it's nothing that
I have to get
really
in and
want
change all my stop losses, because otherwise they're going to sell immediately.
Yeah, definitely. So again, China agreed. I put this out at 3 this morning. And surprisingly, Paul was up. He answered me. So I don't know, Paul didn't sleep either. So the agreement means that reciprocal tariffs between both countries will be cut from 125% to 10%, and the U.S. 20% duties on Chinese imports relating to fentanyl remain in place. So China will stand at 30%. So 90 days, kind of a cool off. They are reducing their tariffs percentage by 115%. And so that should get trade flowing again, in my opinion. And the Chinese agreed to it, from what I understand. We're supposed to know more today. But again, we're a news-driven market, and that's what we're seeing. This week is, not only the tariffs, but we've got CPI and PPI come out. CPI on Tuesday, PPI on Thursday. Those are going to be the two big reports that come out, along with some earnings that are coming out, additional jobless claims. We got some manufacturing data coming out again. So this week on Sundays and early this morning, I put out 3 sets of lists. Momentum, you can go. It's Mother's Day, so happy Mother's Day again. Momentum charts, I think I had 7. Charts of interest for under the 200. I think I had 15. You can go look at. I won't go through all these again. You guys can look at it, or you can ask questions later. And then this morning, I just put one out that above the 200 and meet a lot of my trading guidelines. And some of these we've already been watching with the asterisk by, but another 11 on this that I put out just this morning you can go look at those charts too. So there's a lot of information on our Discord. So, make sure you go utilize that. If you have any questions, shoot me one in my office. To get going a little bit, I want to get going because I know it's going to be long today just because of what's going on. This is going to be interesting. This is the S&P 500. Again, this was when the tariffs came on, gap. And then, then we had this big fill. Okay. This was where the market structure went wild, version 1. And now we're going to see this gap up here, and we'll see where this candle goes, whether it kind of goes up or it's one of those that comes back down. But we're gapping up above the 200, and gaps usually get filled, especially on indices. But we're going to gap up right to this point. And, is this the start of a new, technical bull market where we get above the 200 and we can sustain it? Remember, we get above it, we want to back test it before we make sure we hop in. But, it's an interesting thing to look at. So I went out, I said, how close are we, from my point of view, of seeing this thing turn around? And I always go to the weekly chart. If it'll pop up. And on the weekly chart, I like to use the 50-week moving average. If I'm doing a long-term investment, you can see it comes down, it hits this quite a bit. And it doesn't get you in and out as much. So again, we're still under it for 2 weeks, 3 weeks, 4 weeks, 5, 6, 7 weeks. We've been under it. And then last week we popped right, up to it. We didn't get past it. So again, we're going to open up right here on a weekly chart. And so I'll be watching the weekly to see if we get a close above, the 50 on the weekly, and if it maintains that. So again, transitional times potentially, but again, we're news driven. And how much are we going to get, of a bump after we go up, 3-4%.
Yeah.
Same with the Qs. Qs are going to open way up here. We've had all this trouble getting across the 200. We've had it before, and we're going to open up. We're going to gap up way up above, and you'll watch where the sell orders are. We'll see what happens. But again, interesting times, news driven. Nothing changed from last week other than the tariffs. Fundamentally in these companies, nothing's changed. From really a month ago, other than the algorithms are catching this buzz. We've got a lot of people probably FOMOing, don't want to miss this. But I think patience is still a good way to look at this. This is the Dow. Okay, the Dow we're not even at the 200 yet. Okay, at the Dow, we're going to gap up a little bit, but just not as much. Even at these big prices, 1,000 points up, we're still working a little bit on the Dow to get that to where it needs to be. Dollar wise has been just flat. I don't know where the dollar's open today. I didn't look at that. Gold's going to be down today substantially. The last time I looked, along with treasury yields, which are up, which means the price are down. Gold's been, hanging around the intermediate resistance level. It's going to be down quite a bit this morning at open for sure. Bitcoin has been maintaining. It's got up to this next level of resistance, about 105.5. And, even today it popped up and hit it. And it's interesting, 1, 2, 3, 4 times outside the upper Bollinger Band, and we pulled back in. So I would expect it to pull back in. You still have plenty of room to go on the upside. You got the oscillators going. You just got to get past this resistance level. And if we go back, we can see we're getting closer to the all-time highs right back here. Okay, but this is the last level of really pretty much, you can see right here where we've hit this resistance before. We actually gapped up above it a little. So we'll see. It's pivotal time for Bitcoin. And then on top of that, I know there's some interest. It'll pop over. MicroStrategy. You can see again, MicroStrategy came back. Here's where we had the all-time high, and we're popping right up against the intermediate resistance level. If I close this in a little, you can see where we're going to open. We're going to open above the intermediate resistance level. It's hard to get past that. Catalyst can move us past intermediate resistance levels like we're going to see today. We'll see. We'll see how it goes. Same with the mags. Yeah, here's NVIDIA. NVIDIA is going to open above the sell level, where the sell levels are on the first level. So I always go and I try to see, okay, where's the next level? And it's up at the 200. You see it moved up to the 200. So that's probably where we're going to see resistance if we get any upside after that on NVIDIA. Tesla has been broke out on a Friday. It actually closed above the 200. It's been fighting this for a long time. And here's where we're going to open today. Okay, so we're going to gap way up above the 200 and above the Bollinger Band. And, you know, again, how long are these going to stay up? Are they going to come back to reality and move back down a little? When's the how far is this euphoria momentum going to take us today? Google what got hit pretty good. You know, have all these lawsuits. Google's, you know, came down to support level. Here's where we're going to open. So it's not as fantastic as open. We're still into the 20, the 9, the 50, 200 on Google. So again, just be careful. And then you guys are always interested in this. Palantir. Palantir, you know, we've been kind of fighting the intermediate resistance level. Again, we have catalyst this morning. Look at where we're going to open up right above the intermediate resistance level, but we're opening up below where we opened on earnings day and the day before. So we'll see what happens, you know, in all these stocks. And again, I'm not in any hurry to chase something like this because, you know, it's again market structure gone wild. I put out a watch list, and these I'll go over a couple of these. These are stocks that are above the 200 and would mostly meet the criteria of my swing trading guidelines, my guidelines. SkyWest, I told you, is one of my favorite airlines, and it's popped above, you know, the 50, and it had trouble on the 200, and since 3 days ago, it's following up on the upper Bollinger. This will pull back in for sure. You got sell orders, but you got all the way up to 110 on resistance, 103.99 on the where the sell orders are. Again, today could pop all this up even higher, and then it can come back down. PH, kind of a pricey stock, Parker Hannifin. At 200, retested the 200 Fridays, following the upper Bollinger Band. It's on the inside of the Bollinger Band. You got the oscillators rolling. You got sell orders, you know, at 668.20 and then 695. We closed at 647, and that's even with giving out dividends on last Friday. So that was a pretty strong close on that. American Express, again, got above the 200, retested, back tested, didn't fall below after 4 days of trying, following the Bollinger Band. Got, again, watch for sell orders here, and you've got resistance above. So, you know, we're starting to see these setups, you know, above the 200s where we were, you know, only 30% are above the 200s. I didn't check today how many, but I'm sure it's gone up quite a bit over the 30%. JP Morgan, another one. JP Morgan got above its support, kind of went sideways. We'll probably see this roll up. You've got a tighter distance between the sell orders and the intermediate resistance level up here. So, but again, we've got this nice movement steadying up and to the right, and the oscillators look good. So days like today, you know, is a monkey throw a dart at a board, you know, initially, but you know, it's not how the market starts, it's how the market ends. LKQ, this one came down after earnings, bounced sideways, consolidated up, trouble at the 200. Okay, finally got past it, stayed above the 20, 2 days. Oscillators are starting to move positive. Again, you got a little bit of room on LKQ. Always use, you know, stop if you get in, you know, stops on the bottom, you know, and use the resistance on the top for potential areas to get out. VIK again over the 200 after kind of playing with it, over the 50, over the 9, just kind of going between 9 and the upper Bollinger Band. Tight concentration between the sell orders and where you're seeing the resistance. Again, another nice one. Dollar Tree. I mean, there's more than this. I'm just going to roll through them. Dollar Tree is just kind of slow and steady sideways and up and to the right, just little by little. But you know, you got support at the 9 and resistance at the upper Bollinger. We're seeing the Bollinger kind of roll a little bit, kind of flattening out on this one. Yeah, so be careful. You're seeing MACD also. But today, depending on how, all, tides coming in and all boats are going to rise, we'll see, what happens. It's kind of hard to lose on a day when the whole market goes up as much as it's doing.
Tsunami.
Yeah. 3M.
Mhm.
Talked about 3M last week along with Honeywell. 3M's hit the 50 3 times. And I think today with the momentum, you'll probably get past that 50, maybe even up to the Bollinger. Again, you got some room to run 147.36 for some sell orders. And then, we could run through that. And then you've got the green line of death at 150.92. We closed at 142. So you're looking at, $8 to the green line of death. Less than that when you go up to where the sell orders are. So be careful. And then, last week we had this one in for a long time, DBX. And I would have gotten out when we got in. I put it on the list at 27.49. I would have gotten out before earnings. Earnings was after the bell. So we got out at 29.69. So 27, 20, a little under $3. And then again, Friday it went up and hit sell order. So we would have been out. I would have been out there. And today it could keep going. You've got room to roll, but again, not trying to be greedy, just trying to make money. So again, lots of stuff going on out there. That's the
Where's my Honeywell?
I didn't go over Honeywell. Okay, hold on. I think I looked at Honeywell. And I
Yeah, you
think
crossed it off your list already, huh?
Well, and I think there's always a reason. There's always a reason, Bob.
You got to make the
Again,
cut. You got to
Yeah,
make your cut, Bob.
This is why. Because I can't get past this.
Oh, we'll see today.
Well, you might today. Yep. But you got some room. You could come up here and play with where the sellers are. But I'm hard. And this was when I look at these things. I look at it over the weekend and before all the news came out. So again, is Honeywell, can it go up? Yeah. Do I have better looking charts for trading for me and my guidelines? Absolutely. This is higher risk than 3M for me at this point now, because you got all these resistances up there, but when tide comes in, all boats get risen. So
That's right.
It is, but this would not be the chart I would trade if it were just the chart without the news.
When the tide goes out, we find out who's naked.
Exactly.
Yeah.
Exactly.
You're in it for a different reason,
Yeah.
not just swing, not from a technical.
Yeah. I mean, I'm
you
looking
gotta
at
remember,
I'm looking at it from a technical point of view.
yeah, absolutely.
Yeah, I'm looking at it, not technical.
Yeah.
Well,
So-
both. I think you're doing both.
Yeah.
Trent, go for it. Sorry, I always take up more of your
No,
time
you're
on
fine.
Mondays. I'm sorry.
No, it's all right. Friday there was a call on or a question on the Kerry's call about somebody held a position in Iran, Iris Energy, and they were down 40% and what to do. And I was a financial advisor for 22 years. And the one thing they never talked about, or if they did talk about it, it was very briefly, and that was risk management. It was always about markets going up, about stocks going up, this, that, and the other, never about risk management. And so when that question came up on Friday, I sort of came out of my skin. I just wanted to go ballistic, to be honest with you. And what I was taught as a financial advisor by Ameriprise initially, and then even from our independent broker-dealer, was that you risk manage through diversification and time in the market. And they always referred to the last 100 years, the S&P, the market has gone up 10%. They never talked about devaluation of the US dollar, and they never talked about any of that. And so it was, and what I realized halfway through my career was that they want to keep you invested because that's how they make money. They take fees, they collect assets. If I make a 90% payout, they're making 10% of my assets under management on the fees that I charge, right? So after Liberation Day for me back in April 1st of 22, and I sold my practice to my business partner, Valerie, I started looking for the truth of all this. And one of the things that when this person said they are down 40%, what should they do? And in all respect to Kerry and how he invests, that's fine. But he is down as well. I started thinking about what do people think when they think about investing? What do they think about when no longer, everybody talks about, oh, I'm a long-term investor. Well, no shit, right? If you're doing this and you plan to be investing for long periods of time, you're a long-term investor. It's how you approach the investing. A short-term investor is somebody who comes in, say, with $5,000 worth of capital, tries to make it happen, drains their account to zero, and then never invests again. That's a short-term investor. So here, everybody here is a long-term investor. The key to this is preserving capital so they can keep going on. And so I went on Grok and I asked the question, if I had a $10,000 initial capital account and I had 12 positions in it, and I ran 8% to each position, and I ran certain levels of stop losses behind them, how long, and I had no winning trades, no investments. And when I got stopped out, I reinvested the capital based on the 8% of whatever was left after each time. How many times would it take me to drain my account to zero if I just ran different levels of stop losses? And I was actually really surprised. And so I put in, if I ran a 7% stop loss, how many times? And this means I allocate 8% to 12 different investments initially. I run a 7% stop loss. And then every time I get stopped out, every one of those, that's a cycle. And I start to reinvest. Well, it told me that it would take 199 cycles at 7% to drain my account to zero. If I can't figure it out after 50, maybe I got a problem. Maybe I shouldn't be doing this. That's 2,388 trades. If I would use 10% as my stop loss, that's 138 cycles, okay? It's when you get down to 40%, you only have 29 cycles before you're out. That's 348 trades. If you bail out at 60% and you do this, have a 60% stop loss, you have 17 cycles and then you're zeroed out of your account. You have no money. And what this tells me, and what in looking at this and looking at this data, it tells me that if we're not managing our risk, and let's just say we use a 15% stop loss on companies that we plan to hold forever. So let's say I buy Berkshire, right? And I tag on a 15% good till cancel trailing stop loss. It's going to take me 89 cycles or 1,068 trades to zero my account out. Okay. I'm still in the game. And this is figuring you have no winning investments. Okay. You're just a loser at picking stocks, right? You are just you get a gold star on your helmet because you're going to need a helmet because you're just so bad at this. It's going to take you 89 cycles or 1,068 trades. And what I would in today and last night when I saw the White House newsletter come out about China and US and China have come to a deal, I knew the market was going to skyrocket because it's a news-driven event. But nothing came out on non-farm payroll, nothing came out on CPI, nothing came out on consumer spending, nothing came out on credit card delinquencies, nothing came out on, nobody came out who had reported earnings last week or the week earlier and said, hey, we're revising our guidelines. Everything's wonderful. Nobody did it. The only thing that changed was a headline event. And we're now, Marcus pointed out, we're seeing major gaps up. Well, these major gaps are just based on a headline, 10-word headline on CNBC that's driving this higher. Nothing else has changed. So as you get these gains back, and that person who was down substantially in IRIN, and you get a gain up just think about what is your risk management policy? What are you doing to protect your capital? And maybe, just maybe, should you put in a good till cancel trailing stop loss? Because if you bought, say, Iran today, which is going to open just over $7, and you bought it there and you put a 7% trailing stop and the stock went up, it just, let's say it just doubled. That trailing stop is going to tick up with you. And if it comes back down and retraces, you're going to stop out, but you'll stop out with a profit. Versus if you don't have a stop loss, you just go back to zero or even less. And I think this is so important. And you think about how in professional investors, professional traders, the number one thing on the to-do list before buying a stock is how much am I willing to lose? And everybody has a calculation for that. Everybody has a secret formula. Mark refers to, I've referred to, Paul Tudor Jones. It's not secret. He has just one line in the sand, the 200-day moving average. If it drops below that, he's out. Okay. I think you need to have a little bit more sophistication, but that is his baseline. He probably has way stacks more of risk management there. But I think this just proves to me that if you're just starting to invest, or if you're a seasoned investor and you don't have some sort of risk management process for your long-term or even short-term investments, you can easily be broke really fast. But if you do have a good policy, I mean, even 20% on a long-term, you still get opportunity to stay in the game. And tomorrow, I'm going to hit about allocation percentages, how much to consider allocation wise of your portfolio to one investment. And then I want to hit upon different ways you can use different indicators on how to determine your, especially for swing trading and short-term trading, how to determine what your stop loss should be. And so this week, I'm going to make it a focus on risk management, because I think this is the one thing I was robbed of by companies like Ameriprise, by my last independent broker dealer, was that nobody sat down and said, let's get into the nitty gritty of risk management. And I think this is the number one thing that should be being taught at every level when it comes to investing, how to stay in the game. If you want to know who the best risk managers are on the planet, flip on ESPN around 11 o'clock at night and look for the World Poker Tour. These guys are the best risk managers, because in their game, if they have no more money at the table, they're out of the game. And that is no different than what we're doing here. So that's my soapbox. Risk manage, because this market, today it's all about one set of headlines. Nothing's changed.
Can I just throw in a little bit of a monkey wrench, or at least a personal experience monkey wrench? So I did investing eons ago, and then all the financial stuff with my brother. And so then when I was rebuilding my IRA, I was trying to decide what to do. And I ran into Kerry on YouTube, and he's so engaging and has all these fabulous, long vision ideas. And I just kind of followed him like a little lemming, and without knowing what you're talking about and what I know now. So on the general, whatever you call it, I forget what the name of it is, the general channel that listens to Kerry.
The gold channel. Yeah.
Right. I mean, I can see someone that is new at this, and you just see this vision and you jump in without getting stop losses, trailing, the whole thing to protect it. Now I know that, but I didn't in the beginning. And
yeah,
so it's Margaret, kind of sometimes you're talking to two different audiences, and the ones that are just joining Kerry probably don't know all this.
Yeah, I think there's a
Margaret,
the bridge
Margaret,
is missing.
Paul, let me interrupt real quick. Margaret, the worst feeling, and I don't think Kerry ever had to experience this, was having Ken and Rosie, who just moved to outside of Opelika, Alabama from California. He was a manager of a advanced auto parts for 30 years. He came to my business partner and I with about $200,000. He was 60s, late 60s, good health. He needed roughly about a 6 to 7% withdrawal rate every year. Now, the rule of thumb is 4% at maximum. Okay. And we told him, I said, there's an enormous amount of risk, market risk, all that kind of thing. He died of a heart attack about 10, 12 years later, left Rosie with 2,000 some odd dollars because they had drained their account so badly. I loved Ken and Rosie. They were the sweetest couple. He was a big Civil War buff. They would travel around the South. They moved from California to the South because they wanted to tour all the Civil War events. She ended up going. She was from Korea, South Korea, and he was, your typical American. And she ended up having to move back to Korea. I don't think most people have experienced having to explain to somebody because you overextended yourself in retirement, because we were not taught the proper risk management strategies, and having to explain that to somebody. That happens a lot. And my point of view is much different from Kerry's. My point of view is probably a little different from Mark's, but not much. And I think Kerry's approach is based on the same approach Warren Buffett has, and that he's investing 20, 30 years out. I remember when Warren Buffett bought Burlington Railroad, and I was like, why the hell is he doing that? He had a vision. He has a vision for that. That's what Kerry does. And he and I have talked about this, and I'm like, the variables that you're basing your fundamentals on are based on static variables. I live in a world where I don't know what's going to happen tomorrow. I live in a world where I have to look at it and go, how do I preserve my family wealth? How to preserve the dream? I had to make some hard decisions last week so that I could preserve our family continuity and wealth. And it broke 3 people's hearts. And it's hard, but sometimes you have to do it. And I think risk management, and that's something I am going to be pounding the table going forth on this. I'll overlap him. I love my father. He is a great man. He's a great idea man. And I think fundamentally, he's got something dialed in. But this is a 3-legged stool. This is not a 1-legged stool. And that's what I will be putting out there on Best of US going forward, and doing more educational videos, more things. I told Art last week on Kerry's call, I will be creating a risk management allocation portfolio, video for everybody to educate. And you're right. You go one way, you stay in one element, way fundamentally. And I'll post this, the subscription I post that I subscribe to, a research firm that I subscribe to who focuses on options. And they today went through and talked about what market structure truly is. And one of the things that market structure doesn't take into account is fundamental analysis. It's all mathematical, all mechanical. And that represents roughly half of all market movement on a day-to-day basis, is this mechanical approach. We will see these mechanicals, technical investors will push this market higher until something changes. It will not be fundamentals. It will not be revenues increasing or earnings per share increasing or decreasing. It'll be all mechanical. And I think that's more and more I look at this. Everybody's here's collective understanding of the stock market is just probably half of what is really going on. So the more we can do to protect ourselves out of the gate versus I'm going to hit a home run, I don't like baseball. I'll go to a game because it's fun and you drink beer and the whole bit. But baseball is truly a great analogy of investing. All you want to do is get on base. And all you want to do is push runners around the bases to win a game. If you're swinging for the green, the big green wall in Boston, you're going to strike out more times than you're going to get it over the fence. And that's what investing's about. And all respect to everybody and how they go about it, risk management needs to be your priority when it comes to investing. How much am I going to lose on this trade? Not how much I'm going to win. How much am I going to lose on this if I don't put in basic risk management policy?
Yeah. Absolutely.
And yeah, I mean, I am a guilty party. And it's because of emotion, because of, oh, I have this idea in my head. And I'm very guilty of it. And this is where I'm like, you know what? If I'm going to create wealth, I got to have this policy. And just simply understanding how fast I'm going to drain my account to zero if I don't put something in is an eye opener. When I ran these numbers through Grok, and I'm going to run them through ChatGPT just to get a comparison, I was like, holy crap.
I didn't.
No wonder people go broke.
I didn't have to run the numbers. In the over decade that I was at a self-directed brokerage company, one of the largest in the country, and I got to see retail investors use, we called it the casino, because they didn't know what they were doing. They had no chance against the institutions. We couldn't give advice because we were self-directed. And I would sit and I'd watch. The first one was the .com, and everybody was in and they were day trading, and people quit their jobs, and then they went out and they got into margin. And man, for a while that was good. Anything that said .com on the bottom of it, it skyrocketed. No earnings, no nothing. And then came the crash, and then came the margin calls. And I'd go down to the margin department. I'd watch people get wiped out who had no clue. They thought they were geniuses. They had no risk management plan. It was all up, up, up. Same thing happened in the great financial crisis. I mean, I saw people chase Enron all the way into the dirt. Okay. And I'm like, what are you doing? It's a falling knife, and they've got issues with the legal system. They got issues. I mean, it's just horrible. And people didn't have a plan. They don't have a plan. And I'm as guilty when I first started. I mean, I've been investing my money since I got my first job. I never had a financial advisor. My dad was an accountant, and a very conservative accountant. And then, I live close to Warren Buffett. We've all studied Warren Buffett. And again, I said last week, his motto is rule number one, don't lose money. And rule number two is see rule number one. And that's how he lives. And as I was watching him at the last meeting, I realized just how closely I align and been influenced by his cautiousness and risk management strategy. And yeah, did I miss a bunch of stuff that might have gone ballistic? Sure, I don't chase the trends. Okay. But I used to, in a while, and I would lose, like Trent said. And then I got into, well, something's got to be different. And then when I got into the business, I got to go down and see our technical guys. I got to go see the market makers and how they run, and how they take money away, how they can manipulate markets. And you have no chance. And then now you've got logarithms and computers trading 90%, 95% of the market. Okay. And you're trying to compete against that. And they see a word and boom, boom, boom. They buy, they sell, they buy, they sell. There's no long-term investment for these guys. These hedge funds, they're in and out. It's profit, it's money. And that's who we're up against.
And yet they still have a risk management process.
They do, definitely.
I follow this Jason Shapiro, and he talks about, him and Peter Brandt, legendary future traders, right? Very unknown, but legendary. They talk about 2% stop loss orders, 2% on future contracts, and an allocation to any one position of anywhere between 3 and 4 and 5% at the most of capital. I mean, that's not, they're not taking 100% of their capital and putting a 3% stop. No, they're taking 4% of their capital and putting a 2% stop loss. Now, future contracts move, I think it's 1,000 or a 1 to 1,000 ratio. So every dollar you put in, it's $1,000 leverage. So you have tight stop losses. But the point
Hello,
of
good
this
morning, Lily.
is
I don't know why
you
when I
look
click
at you look at how you invest, and you look at NVIDIA as an example. You look at it, I'll show you a chart of the 10-minute chart of NVIDIA this morning. And I want you guys to tell me what's going to happen in the first hour of trading today.
We should talk
closed the
about
day.
we should talk about how tariffs are going to affect the repositioning of companies in the market. This is going to be a major change, I think.
No.
You don't think the supply chain
Let
folks?
Paul, let me finish.
I know, but you've been wanting to finish for a long time now, and I'm just saying I think there's bigger fish to fry, but we could go here if you.
Yeah, I can. Friday, after market, NVIDIA closed at 116. It's going to open up around 121.67. If you're a trader sitting on a desk and your job is to make money, what's the trade here? What are you going to do in the first half hour? Bob, any
It's
input?
going to go up at the end in the first, within the first hour. They're going to make their profit and they're going to get out.
Okay.
You think it's going to sell off?
No,
This is
I don't think it's going to sell off. I think there's going to be enough volume to keep it up, but majority of them were in on Friday, okay? Because the word was on the street that there was going to be a deal done. Just saying. I even picked
Yeah,
up.
I heard you.
No, I'm saying like
Well-
it's going to go up, but you think like if it starts 4% up, it'll end 6 tonight or 2?
Yeah,
Which way?
4%. 4%'s a lot, but then again, it's NVIDIA. It hasn't really moved. It's been sitting in this area, this sideways for a while. And Jensen's been out talking a lot. So I don't know.
Looks like the highest to me, it's even higher than Tesla, the volume on NVIDIA. It's crazy.
Well, that's the point, right?
Yeah.
So
yeah.
it's gonna jump and then they're gonna dump.
Yeah, oh, so you think it's going to dump?
Oh, yeah,
I think the big guys are gonna dump. That's what I think.
Okay. All right.
if I'm a Harvard grad with a master's in finance and I'm on a trading desk and I've been handled $1.5 million and I get paid 20% of the gains I make, I'm looking at this going, I'm going to let everybody suck in the first half hour of the day.
Are you saying short it? That way
And I'm going to start shorting it as we get close to the beginning of the hour, 9 o'clock or 10 o'clock central, night central and Eastern. And I'm going to ride this down through 10:30 and I'm going to bring it back down to about 118 in the first hour. Because I know every retail investor is getting in this because they think the world is solved
No,
and I'm going to make
so-
money. It's not solved. Nothing's solved. And I think that's my point is we don't know what these guys are doing on these trade desks. We don't know what these algorithms are doing. So we need to better risk manage. How does this tariff deal change everything? Paul, to your point, I don't think anything changes at this point. I think this is still up in the air in a big way.
But that was my point this morning when I posted, we paused to make a deal in 90 days,
Well, they actually lowered
Yeah,
the tariff rate.
That's yeah, but
30%.
that to me, that's pausing, right?
Well, I think it went from an embargo to trade can start to move again. 10%, 30%, you're going to see trade move again. Where at 145%, 125%, it's an embargo. It's not moving. We're going to see trade start to move at those rates.
Yeah, I think boats are going to be called in now. And
yeah,
I think
but
But
that-
how long
very
does it
cold,
take
eh?
those boats to get here? 60
Well-
to 90 days?
I'm not saying there's a ripple effect, but now we see there's light at the end of the tunnel. So if we were a week ago, we're like, oh man, 140%
Yeah,
tax rate. Yeah,
I
we're
went-
feeling. Go ahead,
Yeah, I
go
went to
ahead.
Walmart yesterday. The shelves were still full. Okay. And these companies, they loaded up, 60,
They did
90
load
days
up
worth of
more.
inventory.
Yeah.
So they've got a cushion, for this to kick back in. I think when all these retail guys went into Trump's office, I think it was Lowe's and Walmart and Costco, those guys, that they had a discussion about this. We've got, 6, 60 days, 90 days of stuff. And he's like, okay, I get it. Trump don't want the economy to, he don't want shelves empty in this country.
On his clock. Yeah, he
Right,
doesn't want to
exactly.
look. He's going to lose his base big time. So I think that he would have. So to your point, it might have been a timing, but I think the headline changes a lot.
I think the fact that they lowered the tariffs and they stopped the embargo status of trade between China and the United States, I'd have to agree with Paul that that's a big deal for 90 days.
Oh yeah, then we're gonna have another ticking, nothing.
Yeah.
So my question was going to be is now what changes? What companies will come back? I mean, I notice Apple is up big, and because they primarily manufacture in China, and they go to India, and how are their source people going to look at this? So every company has a supply chain manager who manages all the buyer planners. They're like, oh, we can buy from China now for 90 days. It's going to drive all these guys crazy. So all these businesses have to re-examine how they're going to bring in parts, whether we should continue to go outside or non-China, or whether we're going to go to another country. And I'm trying to look at each company and see how it affects, because sectors are going to be changing a lot, just like they always do, right?
China gets, I looked it up this weekend. China gets a little over 20% of their iPhone production from India right now. And they want to ramp that up even higher. And so I think, Paul, to your point, you're going to see these companies that were really concentrated in China after this kind of diversify that product out around, spread it around as much as they can. If not,
doing that already, Mark.
Yeah, I know.
Second source.
No, I know they are.
But stuff also to many other countries, not just us. That's how they survive. But we're the biggest. We are the biggest importer.
And you're going to see a lot of these companies bring production to the United States, like the car companies.
Well, they have to, right, to protect their business.
Exactly.
Yeah, some have enough deep pockets to do that. It's going to be so interesting how this repositions how the companies are in the market now. Well, how the market reacts to this repositioning. That's
frankly, I think you're overthinking it.
I'm looking at it from when I was in a company and talking with the supply chain guys. They would get it from all over. They would be bidding in India, China, Taiwan. They'd be looking all over the place. So with the tariffs,
why does this? I'm trying to understand in your head. Why is this changing? We made those decisions already. Those decisions were made months ago.
You have some companies that that double and third sourcing,
triple source,
right? But not all
maybe
companies.
More.
Some companies aren't that diligent. Some companies just have a single source.
Well, I wouldn't say that some of them, fail to properly source, but that's.
Well, I'm saying they have single source.
I mean, that's in every business. That's why they fail, right?
That's bad risk management there.
Yeah, exactly.
I'm just saying that's how I've seen companies roll. I'm not saying bad, good, bad. It's just, Unilever I know has like 2-3 sources. Hubble, maybe one source. It depends on the sector and the company.
I worked in procurement engineering for the first part of my career, and I ran all the supply base at Compact Computer from a corporate point of view, 2,500 suppliers. And we had critical suppliers, Paul, drives, memory, boards, monitors, keyboards, flat panels. And, some of them you didn't have a second source just because it was like flat panels, but that was very rare. I always had second sources of everything. We always had, fire in the factory, strike went out on a factory. So we could shift back and forth, and we did. So the key there is, how do I manage my quality? Because even though they're manufacturing to the same spec, the process is a little off. So the variations are different in the components that come in, which could affect the system in general. So that was my big task.
And then you get cost, right? And lead time. Yeah. So it's not only the quality of the product and what you could live with as a function of manufacturing processes and design, but you have the lead time on your different source and you have the cost. And then you have the logistics in themselves. It gets complicated.
No. Yeah. Well, no, I spent 25 years doing that. So yeah, I understand.
Yeah. But it's a shakeup now, though, what I feel. This is a shakeup.
I think it's again, market structure gone wild. we went wild on the downside. And I'm looking at now
Yeah.
we're going to gap up and we're going to have to. This is going to all settle out at some point. I don't know how long it's going to take, but until this gets settled out, we're just doing this, and now
I
we're on
think,
the up. Now we're on the upside of strange market structure.
I like that, the upside, and I'm not gonna, I'm gonna try to stop myself from trying to predict and see what the charts tell me, because no one has a crystal ball. You don't know how it's gonna unfold. So you gotta let
Well,
the
that's
technicals tell us.
I agree, and I look at a market that opens up 4%. What is none of my analytics go? What is the probability I'm going to get an extra 2%? It's going to close 6% up, okay? Or is a FOMO going to get it at 4%, and then we come back down, and at the end of the day, the market closes only 2% up instead of 4%.
Yeah.
That's what I think is going to happen.
So interesting.
We'll see.
Back to
Again,
what
we'll see.
you were talking about, Trent. I think there's a gap. Like Kerry has the fundamentals, and then learn all the technicals from Mark, and then you need to fill in. I think there should be an effort. If you're going to call out stocks that you're recommending from a fundamental, you should really be on top of the technicals, because like even I was talking, yeah.
Well, I think
Paul,
that's why we have Platinum Channel. If you wanted to do that, that's why we created Platinum Channel.
I get concerned with the folks
Paul,
that just go in and buy stocks blindly without the technicals. Like you go in and buy an IREN, and if you don't look at the technicals, you're going to get shortchanged. You're going to be like, oh man, I bought IREN based on fundamentals, but really from a technical standpoint, it's not a good time to be in it.
Well, Paul, I created that risk range model for all of Kerry's stocks. And it was going out pretty much every morning and giving you what the intermediate, the 200 trend was it the stock price above and below it? And I honestly don't think anybody paid attention to it. And so I just pulled it. But I feel like more and more, and this is a selfish point of view, to protect my ass, I have to put this out there. Because I've seen when people get bent on losing money and what they do. And it's always a 1 o'clock in the morning lawyer who says, have you lost money in the stock market? And that's why everything we say is not advice. This is not a recommendation. Do your homework.
I don't think that makes me feel better.
My point is that and you're right, I have to get better at this. And this is risk management. I think this is the number one thing we should be teaching here, risk management. I honestly look at this and I go, today, this is for suckers. This is the day where markets will jack you up higher, get you all pumped up and all the tariff things and all this. And then somebody's going to come in and say something stupid.
Rug pull.
And I know who's going to do it. And it's going to shit can this thing down so fast.
You're saying it's a sucker to come in and buy now. I would agree, but to me, it's going to be a great day to understand where money will start to flow once this all plays out. Because it's
when it plays out. But here's the thing, Paul, you have to take into account all these other variables other than tariffs. Tariffs is like 1/100th of the sliver of the pie. You got to think about all the other 99. You got to think about how I am as a consumer, how you as a consumer, how Jan and Joe who live on $30,000 a month. I mean, McDonald's told you poor people can't afford this. I mean, if that's not a leading indicator to economic conditions in the United States, nothing is. And so you have to take these in account. Nothing has changed other than an agreement to postpone for 90 days between us and China. That's it. And the market's going to feed off it. And it's going to be, and what's going to happen is the retail investor is going to look at that and go, everything's wonderful again. And they're going to pile into this shit. And they're going to buy the high beta stocks and they're going to buy the high, the Mag 7 again. And you're already seeing it. And then Wall Street will turn around and go, I make money off your bad decisions. And they will make money. They do. It happens all the time. I mean, who won biggest during the great financial crisis?
Thanks.
Goldman Sachs. Goldman Sachs. They went against everybody they were recommending bonds to. They went the opposite side. I mean, come on. Think, risk manage. That's the point of this. Just be careful.
I'm not, I'm thinking about some of the folks that connected with me on this Best of Us channel that did lose a lot of money regarding some of the picks. I mean, risk management, you're right, needs to be
It's
a
got to
higher
be number one.
priority. a
One
higher
thing,
priority, no doubt.
maybe, all of your technical, that you use, Trent, I can understand it, but it's way over my head.
Yeah.
Just
I
maybe
need to
it's
simplify
something
it.
like, well, somewhere when Kerry's in inspiring people, say trailing stop loss, just something like basic, protect yourself. And then maybe as they continue to participate, then they'll learn more about it. But it would be really helpful, people that have more simple brains.
I think the problem with that, Margaret, is you're talking Kerry's really investment, and he's got like, what is it, January 1st, 2028, the stock will be at that point.
Right.
Okay, now that's
Yeah.
not the way I've been in it a long time. I can't predict to you what the stock price of NVIDIA is
Right.
going to be in 2 days. Okay.
I get both sides, but
Right,
if you're going to invest on Carrie's vision,
But are
at
they
least
investing or are they
protect it.
trading? Yeah, are they
well,
investing or are
I
they
can't
trading?
answer that, but
Yeah,
I wish I had put stops on some of my investments that when I was inspired by him.
Even
Well,
as an
now
investor,
I-
though, you should, even as an investor, you should have risk management and have some knowledge on how to read a technical.
I agree.
Most people don't, though. People
Right.
are about hope. I'm like, do hope for me. Just go do it right now. Hope,
I've said
what does that get you? Nothing.
I've said on Kerry's channel many times, probably, that look, if you're using a daily chart, you use the 200. That's as simple as you can be. Okay, that's it. Okay, if you did that one thing, you would save yourself on so much
Mhm.
on indices, on some stocks. Okay, but again, on the daily chart, you could be in and out of that if you use that because it's a daily chart. And so
Right.
I would go to a weekly chart and maybe use the 50 week, which I've said on there too. Okay. But I
Maybe
don't
they
think
just don't
there's
listen.
a lot of people, Margaret, that aren't like the group that's on here, that they just
Right.
want somebody to tell them buy here and sell there.
Right.
That's it.
You're right.
That's all. Yeah.
That's,
And that's what I'm up against. That's why I stay on this side of the channel.
well, and I think and
That's how he sleeps at
know,
night.
my vision of this is that people, I joined up with Kerry because of multiple reasons, but the main reason was I saw a gap in it in investing in education and how to go about this. And risk management to me is like that number one thing that is being talked about. I haven't talked a lot about it. I haven't been good about it. And I think I'm seeing times like now where we could see another great financial kind of event, great financial crisis event. And I'm like, I don't want people to lose money. So I'm going to be talking more and more about risk management, how to calculate stop losses, different ways to calculate it, that kind of thing, and really take the emotions out of investing because I don't want to see people lose money. I've watched my Kerry lose money based on an idea, and I don't think that works.
That's why I always have a trading or investment plan and take the emotion out, And what the problem is with people, crap, I got out of that stock, it went up another 2 points, I missed out on 2 points. But there's no way there's 2 points more, or on the downside, if you don't get out, you might have gotten out down 2 points and it goes 5 points down, and then you feel better. It takes the emotion out, you're right, Trent. And the reason I got into this was because I saw so many people retail get wiped out back when I was in the self-directed brokerage, and it just killed me.
I love how the three of you have independent ways of thinking so that I can pick and choose which one is the one that would be appropriate for me. I love that. Thanks.
Mhm.
Thanks,
Yeah.
Raymond.
Well, and I think that, as I was last week, I was up in Birmingham and I talked to Kerry. I was like,
There we go.
this is a three-legged stool. This is a three-legged stool. You go sit on a stool with one leg. You tell me how long you stay up before you bash your face in. You don't. How about 2 legs? No, don't work. You got to have three legs. And I think that's what, my mission here is to bring three legs to the stool and make you a well-rounded investor.
Well,
Everybody's a long-term investor.
Netflix and
It's just how you do
Spotify
it.
are diving. Everybody else is going up.
Who is?
Netflix and
Netflix.
Spotify.
Really?
Is it possible to go through your VIX chart, Trent, and see how your volatility index looks today?
Oh yeah, absolutely. You mean the, yeah, absolutely. Let me share this real quick. Oh wow, it's 8:30 already. Crazy. Okay, can you see this?
Yes.
Yep.
Okay, so 19 is that line in the sand on investable bucket and chop bucket. Remember, chop bucket is where market volatility bounces around. Right now, what we're seeing is dealer gamma, which is negative. When it's negative, VIX is up in here in the F bucket or chop bucket. Dealer gamma is becoming neutral, so they're playing a very tight range in the option market, so they're very neutral, and so chances are we'll not see as much volatility today in the near term. Once the volatility drops below 19, this is more bullish, and dealer gamma becomes positive, meaning they're taking on more risk. And right now, what you're seeing in the systematic or tactical trading world is they're neutral right now. And that's why you're seeing volatility subside. That's why you're seeing markets go up. And we could see, with volatility subsiding, being tight, you're going to get a tighter range in stock movement in equities. So the pop we're seeing this morning, like Mark said, if you're up 4% in the beginning, can you go up another 4% at the end of the day? Likely not. Now, if volatility exploded, widened out, you could see another maybe 200 basis points higher on SPX and that kind of thing. But right now you're sort of in this neutral position, but you're still right on the edge of the chop bucket and the investable bucket. But this is when you step back and you take a look at the macroeconomic side of it and go, what has changed? Answer those questions, answer that question. What has changed? Only one thing has changed today. And that's the headlines.
All right, 4 different items on this. You think they got two, off the bottom, off the top?
I can't hear him.
I didn't catch it.
Breaking up.
Do they have every time? Oh, no.
Yeah.
I think
I think he's talking to somebody else.
I think so.
But yeah, I think right now volatility is subsiding. Once we see some certainty in other variables of the market or other economic conditions, positiveness, if we see good numbers in some way, a CPI or something like that, we could see this market starting to move higher. But just be cautious. I think at this point, I don't think there is a majority of the economic data is still negative versus positive. The other side of this, Mark pointed out on what was the 10-year, was it? Yeah.
Yeah.
The 10-year right now is trading at 4.46% yield, yet we still have to refinance. The United States has to refinance roughly $4 trillion this quarter. And they're going to refinance it at a higher rate. Oops. That's still a problem. That's still a problem.
Yep. Oil's up, gold's down.
Yeah.
Yeah.
So, but volatility is subsiding, which means, just think of it as volatility can be a positive both from the top side and the downside. But volatility is now compressing, it's getting shallower. So movement in volatility is not, or stock equity movement is not going to be as explosive for a while. Just it could be bullish and keep moving higher, but it may not be as explosive as we saw when the Liberation Day announcement on tariffs came out, where volatility exploded and pushed things lower. So,
Trent,
does that help?
Trent,
Cool. Yes.
Let me show you one more chart here real quick, if I can.
Okay.
If you guys want. I know it's past our time, but this is kind of an interesting day. Oops, hold on. Where'd he go? There it is. Okay. So what I see, we looked at this an hour ago, this chart, we said we were going to open right here. You see, we did open right on top of the Bollinger Band. You can see where we are. We've dropped down a little bit. And if I go to a minute chart, let's go to a minute chart just today on the SPY. If it'll go, here we go. And you see, here's where we opened, right where we're supposed to. And we're starting to see, again, we've only been in it 6 minutes, but it's coming down a tad. Now, can it go up? Sure. But when you start at such a big high, usually you see it go back down and you end up, if you're up 4%, you'll end up 2 maybe, but I don't know that for a fact, but that's just from watching it all these years. That's a lot. 4% is a lot in a day, on any day, in the big one. So just be careful.
That's a big move.
Yeah. And we've seen this before on charts. Let me go back. I'll just show you. Like this chart here, we opened up here, after being down. And then where did we end at the end of the day? Here. Okay, you can look at these red charts. We opened up here, closed down, opened up here, closed down, opened up here, closed down. So just be careful of those. And that's what I'm thinking we're going to see. Not that we're going to close, now we're above the 200. Now 200 becomes support. Will 200 become support and hold? That's the question. And we'll see that today, or is it going to come back down below the 200? That's the question. That's what I'll be watching today on these indices. Patrick, we didn't get the European report. Did you want to give us a quick update?
Well, it's a bit buoyant over here. The FT is up 0.5%, and I think that they're a bit optimistic over here. We've got more on our plate really with Europe and European wars and all that, resolving them. It's most of the governments are worried about Russia and what's going to happen next.
Okay, your birds are optimistic. I can hear those this morning.
They are, yeah. They're chirping a bit.
Yeah.
Yeah. I asked ChatGPT about whether this chain reaction of automobile and housing repossessions can be prevented, because it will create a sort of tsunami of indebtedness and possibly a recession. And ChatGPT said that federal and local governments should have a coordinated response in the next few weeks to prevent this catastrophe happening, because with this 90-day thing, it won't prevent the ports from being closed in the next week or two.
Okay.
Wow.
What's the consensus over there?
Well, I'm not sure we got through the news of today to have a consensus on anything right now. I don't know. I mean, the market seems to like it, the way we're looking at it. I like your birds anyway. You got some sunshine back there. James had a question, looks like. Are you done, Patrick? Is that it?
Yeah.
Okay, thanks, Patrick. James has a question.
Mark, the reason I'm asking is, see how you're talking about stop losses and selling stop losses. I live in Scotland, and I can't because I've got American shares. Most of my shares are American shares, and I can't set a stop loss because not only the price of the stock, but there's the FX as well. The foreign exchange,
currency exchange.
Yes, the foreign exchange. I can't set a stop loss against. I've got lots of American shares. I've got some UK shares as well, but I can't set a stop loss or a trailing loss and most of these American shares that I have. So I can't. Do you know what I mean?
Can you set a sell limit? Where you set a price? Let's say you bought something at $7.
No, you can't sell it. You can sell you can sell a buy limit, but not a sell limit. You can't.
Wow.
You know what I mean? Because of the foreign exchange, you can't. I can't do that. I've got lots of American shares. I've got Berkshire Hathaway and all the other ones.
Wow.
Amazon, the big seven, but I can't set a stop loss.
James, you need to put your American shares in US dollars. Then you can do that, but not if you're trading in pound sterling. That prevents you from doing that.
How do you do that then, Patrick? What trading platform are you using?
I'm using interactive investors.
Right.
And I have no problem, but you must put your American shares in American dollars, and that's the only way you can do it. Otherwise, it can create problems.
Right, because I was actually going to try another thing as well. Actually, I was going to 212. I can't remember what the name of the company is. 212.
Do you have the ability to do, what did you say was interactive brokers, Patrick?
Interactive brokers, they're the best brokers in the UK at the moment. They have very good track record and very good customer service. I've had no problems with them. I've been with them for over a year now, and I swear by them. They're very, very efficient.
Yeah.
Well-
Maybe that's something you want to look into, James.
Yes, I will do. Yes.
Okay,
Yes.
let us know tomorrow because Patrick's here. I'm sure Patrick could help you if you have questions.
Right.
One other approach, James, you could take is just calculate what you want your stop losses to be, price wise, and write it down, and you just double check every morning or every afternoon to see where the stock price is, and then you can execute from there. I've seen people do that approach. It's more manual and it's more labor intensive, but at the end of the day, it's about preserving capital, and sometimes you have to do things you don't want to do
Well,
to do that.
True.
That's for
I've
sure.
actually, just to be honest with you, I've just set up there's one of my accounts I can actually set up a stop loss, and that's only one. It's the Gyro is the name of the company, and I've managed to set up with that. But other than that, I can't set up. But that's me just starting to set up. I'm exposed to, obviously, to anything that happens in the stock market. I'm exposed to it, and that's
yeah. It changes how you tweak how you go about investing. That's for sure.
yes.
So cool. All right. Well, it's a little, wow, we went a little over an
I
hour. This has been
raised my
good.
limit on boot to where I thought it would never go, and it went. So I made 16% in 2 days.
Wow.
Hey, all right.
There you go. There you go.
Wow, look at that. Yeah, let me put that up here real quick. And this was I've had this, I think last week I had this on the list too.
I bought it down at like 115 or so, and
it
just shot past everything.
Yeah, I put it on the list at 113.49 right here.
Yeah.
4 or 5 days ago. And look at that. Right up to boy.
That's where I put my stop at the 200 and shot
Nice.
past it. So
nice work. Yeah, this is a good day to take some profits. It really is on swing trades. If you have something in and it hits one of these resistance levels, it may go higher, but you got to get it in your head. I'm going to follow my trading plan. I'm going to be happy with the profits I get and get out. It's that when you start a motion that you start making problem. You start having trouble. So good job, Margaret. Look at that smile on Margaret's face. I like that. That makes my day, Margaret. Thank you.
Mine too.
Yeah, good.
All right. Y'all take care. Have a great day. We'll be back tomorrow at the same time. It should be exciting for sure. Yep. And I really appreciate y'all's involvement and questions and all. So I really appreciate y'all for doing what you do. And
someone's can't reach Discord. You can see the chat before you go.
Yeah, one last thing. I think my Discord, I don't know, like again stopped working. So when you get chance, please check on that.
What if you wouldn't mind sharing your
email ID?
Handle name? Your handle?
Oh, handle.
Like what's your name on Discord? Everybody has a weird name.
My email ID, I don't know handle name, but
like mine's GBL. So
okay.
When it comes up on the screen, what is it on your, if you were to send us a message or maybe you didn't know.
Even I can't even log into that. Like it's saying something. Let me know. When it's click on the Discord, it's saying it's not even logging into that. It's saying you have to get their subscription or something. So yeah, I'm into that. Yeah. So look, I lost.
Here, I'm gonna I'm gonna post a link to you. Hold on 1 second in the chat. And this should grant you access. You're platinum, right?
Yeah, I'm platinum, yeah.
Okay. Hold on 1 second. Where is your name in the chat?
Srinivasa. I mean, if you remember, actually, Kerry's meeting, somebody told the issue. I think similar issue for me too. On
Yeah.
Friday, doing that at that time.
Okay. You see that
Yeah,
link?
yeah.
Okay, that should get you in.
Let me and that. It says welcome back. It's asking me my email number. So
Okay. Did he disappear?
Where'd he go?
Okay. Well, hopefully that worked.
All right.
All right. Well, let's wrap it up.
Everybody enjoy your profits today.
Thanks, guys.
Yep. Y'all
All right.
take care. Thank you.
See you guys.
tomorrow.
Bye.
Bye.